And joining us now is the author, Ray Dalio, founder of Bridgewater, one of the world's largest hedge funds. Ray, it's good to have you. Congrats on the book.
Thank you.
So is the U.S. going broke?
Yeah. The reason I wrote the book is that for about the last 50 years, I've been an investor who has bet on bond markets, and I've been through plenty of these debt crises. They happen over and over, and they're not understood mechanistically. So the book, the purpose of the book, is to explain the mechanics of how this happens as it applies to the United States. And so I'd love to just take a minute and explain the mechanics of how that happens, if I can.
Yes. I mean, we do. We get the headlines every day on the high debt and growing debt load. So tell us what we need to be aware of.
Yeah. In other words, why now, not another time? Is this a false warning? What happens? Okay. I just want to convey that. There are three things that happen. When you could think of the credit system for the government as being very similar to your own credit system, or if you're running a company, what it's like to run a company in debt, except for two different things. They can print the money and they can take the money from you through taxes. But the economics, the debt is basically the same way. And so think of the circulatory system like there's this great circulatory system that brings credit to people. And then if they use that credit well, they produce profits, and the profits pay for it. And so if debt is rising relative to income, that's a problem. And so what happens is mechanistically is first that as debt and debt service rise, then the debt service, the interest rate, and the debt payments increase and squeeze out spending. And so you're seeing that. In other words, you're seeing, I'll go into the numbers in a second. I'll just get the three forces. The second force is a buying and selling. In other words, the one man's debts are another man's assets. So they're holding these bonds. There's so many people who are holding bonds around the world, the debt holders. And that they then take those bonds, and if they now have to buy a lot of other bonds because we're selling those bonds. Not only is there a supply-demand problem now, if I actually calculate who are the buyers of those, there's a reducing demand relative to the supply. And if you get into a position where they have to then worry about those bonds, they could sell those bonds. So the amount to be sold, it can be much greater even than the amount of the new debt that's being produced, and there's a supply-demand problem. So the second factor is the supply-demand, and the third is when that supply-demand problem happens, either interest rates go up or the central bank comes in and prints money. So if we go through those numbers, I can take you through them pretty quickly. You can see the position of the U.S. and the problem emerging.